Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Michael Lane. He is head of iShares U.S. Wealth Advisory at BlackRock. Michael, always great to see you, and great to see you here at the ETF conference.
Great seeing you, Judy. It's great to be here. It's a packed house, busy place.
It is indeed. Well, thanks for stopping by. So tell me, what investor problem or outcome are we talking about today?
In one word, liquidity. But let me give you some context on that. There's different ways of thinking about liquidity. The way that I'm speaking about it right now, and the questions I'm getting asked a lot, is how do I respond to this confluence of two big issues that are happening in our industry? One is the consolidation of the financial advisor businesses. So you're seeing that in the RIA space, particularly the registered investment advisors, a lot of consolidation. And then the other side is the models, the model marketplace. It's growing part of the business where you see a significant growth, whether it's in home offices of broker-dealers, registered investment advisors, they're turning more to models. Those two trends are coming together, causing increased need for liquidity when they're trading ETFs.
Okay, and how are you solving this problem?
Well, the good news is, being the largest, particularly when you think about fixed income ETFs, that's one of the big issues. I'm sure you're hearing it a lot when you're interviewing people about bonds are back, yields are up, it's easier to get income. But one of the things that's really important when you think about fixed income ETFs is the liquidity of those fixed income ETFs. And how we're helping solve that problem is it's one of those where sometimes bigger isn't always better, but in this case it is. Because we have 18 ETFs that have more than $10 billion of assets in them. We have 45 fixed income ETFs with more than $1 billion in assets in them. 115 different choices. So when you say what can we do to help solve the problem, we can solve the liquidity problem for advisors and individual consumers.
Okay, so which ETFs would you like investors to consider?
Well, it depends on what their needs are. I'm a big believer that you first have to understand what your goal is. I talk to my kids about this as first-time investors. What do they want the money for? Once you understand what your objective is, your need is, then you can start to look at what types of investments you want to purchase. If you're somebody that just wants income and very little interest rate risk right now, then I would look on the short end, and I'd look at ETFs like SHV or iCash, ICSH. Very low duration, very low interest rate sensitivity, but yielding more than 4.5%. So good income for a short period of time. If you're somebody that's concerned about interest rates going up, then that's something that you want to float with those rates and have low interest rate sensitivity. So I suggest to people to take a look at T-Flow, which is Treasury floating rates, or Float, which are corporate floating rates. Those are interesting options. And then if you're somebody that doesn't mind taking a little bit of risk, you have a longer duration, a longer time period, you can extend your duration a bit, which means you can have a little bit more interest rate sensitivity, but you can take some credit risk. If you're in that position to take that risk, you can right now get yields over 7%. So those are the three areas that I tend to talk to investors most about.
Okay, and where can investors go to learn more about this?
I'd suggest going to iShares.com. We have 400 different ETFs, 115 of those on the fixed income side. It's kind of like going to cars.com and looking for a car. You can go to iShares.com, change a few filters, and it'll suggest ones that fit your need.
Okay, great. Well, wonderful to have you here today. Thank you for joining me. And that's ETF Leaders, powered by the New York Stock Exchange.